perhaps the market is getting a little bit ahead of itself. There's lots of hope that there's going to be huge tax cuts, deregulation, et cetera, et cetera. But we have to see. But you can't dismiss the fact that there is a lot of tailwinds right now for President-elect Trump's agenda. So I think it is something to keep in mind. I wouldn't be getting too euphoric, though, that this is the beginning of some massive bull rally. It could be, but I don't really see it at this point. I think it's more of we don't think regulation is going to come down hard on the market and on companies, and therefore the market's kind of expressing its relief over that perspective.
And this is still historically perfectly priced and expensive market. What would be the catalyst then, Mike, for disappointment and a correction? And how big do you think that correction could be? And let's face it, one is well overdue.
One is overdue. Yes, that's correct. Remember what a correction is, 10% drop, right? So it's just hard to say. That you're asking me, is the market going to go down? I think in the end, the market's pretty richly valued right now, given the uncertainty that we have about what's actually going to be put in place. If you look at what happened with the even the Treasury Secretary nominee, you had a more conservative nominee, I think, was actually placed officially. And I think that in some respects, we have to be careful that we don't think this is too much like the Wild West. But I think that we are in a market territory right now that we are priced for very good news. And if you're an investor and you have profits, you might want to take some of your profits on some of the names that have rallied and rebalanced to maybe some of the more conservative names in your portfolio.
Where the market heads and what happens from here, a lot of it is down to what happens with rates, right? And I'm not going to ask you whether you think the Fed's going to cut or not cut coming up at the next FOMC in December, but I'm really interested in whether the 10, seems to have found a floor at about 440-ish or so. Do you think the key thing is whether it floats up higher from there or not?
It's hard to say, but I think it's entirely possible the floor could go lower if there's some disappointment in some of the stimulus programs that are put in place, that they're not as massive as some people expect. I could see the 10-year testing the 4 yield. But I think that, our view is that the 10-year right around 4-ish in that general neighborhood, and maybe 4.25, somewhere in that neighborhood is a reasonable, I think, expectation. You'd have to get some pretty bad news to send the 10-year down below 4. That's sort of a break level. I think that would be there'd be something else going on in the world at that point. So I think that you're not going to see massive drops in rates. I think that you might have if there had been a different election outcome, but with the amount of gasoline that's going to be poured on the economic fire, I think you're going to see it pretty difficult for rates to go below 4% at this point until we see some economic news that suggests differently.